Okay, good afternoon, guys. How are we doing? How are you, Gino? Good to see you on, mate. Now, just let me know if you can, if I'm coming through clear, if I'm coming through nice and clear, nice and loud, and then we'll get into it. There's a few in coming in slowly. G'day, Murray. How are you, mate? All good. G'day, Paul. Now, let's rip into it then. Welcome to Trade Setup in the live stream. We've got the 9th of July now, so we're ticking along nicely. Anyone that's new, just remember you can join us at, you'll see in the top left-hand corner, Twitter, and I'll repeat myself a lot, but it's good too. Twitter, I think what it's called, the handle is @trade_setup. If you go trade setup, I think you come up with something else, and it won't be us. Just look for our logo anyway. You can join us on Facebook if you like, but they're pretty much repeating themselves, their Twitter and Facebook. But most importantly, join or subscribe to us on YouTube in the bottom right. Now, we'll just dive straight into it today. It's going to be more of a short and sweet session, so more just talking about shares. So feel free at any time just to chuck in some shares that we'll look at. We'll go through the typical, just see what the US did on Friday night, how they finished up in the week. As most of you know, they did quite well actually, which I was slightly surprised, but we'll chat about that. See where the ASX is. Obviously, that higher close on Friday night has dragged us higher. Our SPY's actually looking quite good, if anyone follows that. It's probably got a bit to go. I'd expect it might just run up a bit more, and then you'd expect some sort of profit taking or a bit of a backing off from there. Now, what was I going to say? Straight out the head. Anyway, we'll get stuck in. I hope you all had a good weekend. I know I did. It was raining. If anyone's down from Melbourne, it's pouring down here, so it was more of just an inside weekend. We didn't do too much, so spent it playing around with the kids, chasing them around the house, which was good fun. Resting them, so I actually quite enjoy that. I hope everyone else enjoyed themselves too, and we're ready for a new week. Now let's close this down, and we'll just get straight into it. Let's go to the US. So as we know, or as you all should know by now, let's transition that. Sorry, 1 second. There we go. The tariffs were implemented, and 35 billion from the US onto China, and China retaliated with another 35 billion. And there's talk. Well, Trump is talking up potentially up to another 500 billion in tariffs as well, which I think covers anything imported from China, or the last, I think from the last GDP figures. So that's quite heavy. Obviously talking up a bit. Still, I think the market had factored a lot of it in. Coming up in the date, I thought there might have been a chance that there's some sort of negotiation. He says something, and then China, they've some sort of negotiation going through, but that didn't happen. The tariffs, I think they were implemented, and of course, China's retaliated straight away, and which everyone sort of knew that was going to happen. It did cap the gains in the market. We had in the US, was it payroll figures, employment data was quite good, although probably not quite as strong in the underlying. Once you break it down a bit, the numbers were better. They were higher than expected. I think somewhere around 214 or 20,000 gains in new jobs created, as opposed to expectations somewhere around 180 or thereabouts. But I think the data, it showed that the unemployment rate increased from 3.8 to 4%, which is not such a great thing. So it's a bit unusual. And wages actually grew less than forecast. So although there is wage growth, and that's sort of the key thing, I think I was going to say the RBA, the Fed Reserve in the US are watching for interest rate rises is the wages growth. As long as they keep growing, they'll continue to look at new rate rises or further rate rises, or just keep their plan in place. So the US dollar got sold off a bit. Although the numbers were good, that sort of underlying figure is potentially pointing towards not as stronger tightening cycle from the US as they may expect. If especially with tariffs coming online, the Fed have actually mentioned that. So if they do kick off a bit of a trade war, that's going to crimp growth as well. So they may have to reassess their, if the numbers are starting to back off slightly, and there's just no need for the extra 1 or 2 extra rate rises in the US there, which is not bad for, I guess, shares over there. So it was a positive night in the US. I think the numbers that was out at 10:30. I think payrolls were out at 10:30, which lifted the market. Europe was quite strong too. Well, not as strong as the US, but they did quite well. After those numbers, that was a big thing. Everyone knew that there's going to be tariffs unless something come out. So I think now the positivity was capped because of the potential for moving up to, scaling up to 500 billion of tariffs. So what they say, it was only a tweet away, a tweet from Trump away, the Twitter king. Um, so yeah, we'll see how all that plays out. So our market was lifted on the open today. We're currently up about 11. We're up about 25 or 30 at one stage, which is what we expected. The SPY kicked on in the overnight session on Friday and was probably about 30 points high, 25 to 30 points high from where they closed at 4:30, thereabouts, 4 o'clock when the ASX closed. We've opened up and just pretty much drifted lower probably most of the session. I think it was earlier on. Let me just get that up. We're going to have a look at those anyway. Have a look at those now, XJO. So you can see, picking that up, intraday. That's the 1 minute chart. So opened up and started pulling back from about 10 to 11. So the market opened up, all your retail investors jumped in because of the US is quite strong, and we've just been grinding lower. Still held up by the banks. Banks are doing quite well today. You can see, WBC not too crash shots, probably doing the same, backing off from the open. CBA's not a bad session there. NAB, a bit like WBC and ANZ, they're actually up as well. So they're getting dragged higher, the banks. I find that interesting. I've found that tough. I would find that tough to trade because of what's happened. I'm probably stuck with the news. Let's just close all that. The weekly charts. Who's trading the banks at the moment? Screen fuzzy. Sorry, Brent. Just when you look at the screen, go to the bottom right corner of YouTube, and you'll get the little spinning wheel. Click that. Go to quality, and click 720p. So you'll see it just here. Hit that spinning wheel, hit 720, and away you go. That should clear it up a bit. Actually, I'll do mine while I'm at it. All right. So who's trading the banks? Helen, you've been in and out them. Are you still in? Good. In all honesty, I probably would have found that a bit tougher to trade. You've had ANZ doesn't look too bad, even though they've probably gotten the shit a bit lately. Pardon the French. They've the weekly's not too bad. You can see this big sell-off from, what was that, back in 2015? Big sell-off here. They've rebounded here, and this price action is not too bad, even though they've come to the pump a bit lately. You can see this price action that took out the anchor with this move down, popped up, built your lower high, and it's just been grinding higher. So now the trend has actually changed slightly. We've got this minor anchor. You can see it is somewhere around the 28.20 thereabouts. That was broken a couple of weeks ago, and you can see popped up here, break that anchor, see around 28.25, and off a minor double bottom. So maybe that trend down or that longer term sort of push down is over, and they're going to either either consolidate sideways, or it's just going to grind its way higher. That way, you'd be looking potentially up to around that $30 above, was it 30.50, the sort of previous high, or right up to somewhere around that, was it 32.50, these highs just up here. That's on ANZ anyway. So the banks, they're pretty much most of it. I mean, NAB, I wouldn't jump on that. Looking at the weekly chart anyway, the anchor for NAB is way back up at 29.50 for me. For this downtrend to be broken, it could just grind up and then roll over. And they are getting a bit overcooked on the daily. There's been a nice little bounce. CBA is probably my most favorite, and that's because of what we've been describing lately about the push through 70 cents, $70. Oh, perfect. Paul, you're a champ. So yeah, that push through 70, that big washout, and you can see that. Yeah, we were speaking about that prior to that move down, or during it, basically, when it's and it's off the weekly charts and even the monthly chart. You can see it's had this big run up here, big pullback, a lot of support, a lot of buying back in around that level, and that was way back in 2016 when then we popped up, had a lower high in comparison to that $95 mark, lower high hit, worked its way back down, but even the monthly was overcooked down here, so it's taken a lot of pressure to push it from that previous high back down and just down to that 70 mark. Even on the monthly, it's taken a lot of effort to push down there from the sellers. Buyers closing out, but maybe positions built. You don't know who's doing what down there, but you can just see from that high to that low, bit of effort from the stochastics, overbought down to oversold. That was a monthly. The weekly was hovering around at oversold as well, and the daily at that stage too was sort of bouncing off that oversold zone. So probability was it was more going to be a washout. Just clean them out, especially some of those longer term traders that had this buying up here. They were looking for that pullback and looking for that continuation higher. It just didn't happen. They got churned up through the Royal Commission. Yeah, buying early and you. It's probably Paul. It's probably a bad move. I think my strategy, the way I look at it, doesn't quite work out because you can get this move here, and I've been watching these for a couple of days now, just looking at it. This move up in the weekly, for me, I wouldn't be jumping in, but that's my style. But this could happen. You can get that sort of grind high. You get quite a few touches here, a bit of a washout even, and then pop. And you could leave a bit on the table, which is all fair enough. I don't care about doing that. But there's not really set up in the daily. You can see that pressure, even with a big washout here. Could just be a straight out bounce. There's nothing to say from that weekly that trend has changed. Could be bouncing, and then you continue to just move higher. This becomes not a washout. It's really just clearing the way. You get a lower high, and then it rolls over and pushes straight down. The daily's looking a bit cleaner because it's suggesting that leg down, purely because we've broken through these sorts of these minor lower highs, say somewhere around 73.50 with this pop up, and it's pulled back, and it's really didn't have much of a pullback at all before buyers were starting to jump back in again, and you've got this extended move up. So that's a sign from the daily that this trend down has changed. So if you're looking at it that way, along with a major washout on the weekly chart, it's quite positive for me. On CBA, but the others not as pretty, I don't think. So anyway, that's what's dragging the XJO up quite nicely, and that's powered through, like I was saying, that 62.50 zone. Popped up here, getting again still a bit overcooked on the weekly, so it could be just getting a bit overcooked that you'd expect on the daily as well. So those banks, that would lead me, if that's the case on the banks look overcooked. If you just go back through, it's overcooked on Westpac, same as CBA, same as NAB. If they're doing drag in the markets higher, mainly financials, and the rest of the market, it's not struggling, but it's a lot of these charts. If you flick through a lot of the miners, and a lot of them are getting a bit. They're not struggling. They are trending up, but they have been trending up for quite a while now. If they're running out of steam, they're running out of buyers to be jumping into those. That's not going to support a move up on the ASX. And if you get then couple that with, say, the banking sector, the financials that are getting a bit overcooked, then, and if a bit of heat comes out of that market, maybe this ASX is going to roll over. But I mean, you can't bank on that. All you can do is when you see this price action is look to jump in. And if it starts to get a bit overcooked, you look to take some risk off the table potentially, or lock in some gains, or tighten up your risk, however you attack it. But yeah, either way for me, it's the weekly's looking great. That weekly's looking up. It's just this move up from, say, 57.50 has been up quite strong. We've had pop up to the highs, retest, had a nice little pullback, another extension high. So even if you take it from, let's just measure that. Probably don't need to. From this low, you can see at 5,700. Actually, I'll draw it up. That's sort of the low I'm interested in. I can't do it on this. I just want to measure that. So that's the sort of high. Well, let's take that back. That's a bit rough. So that low to high, if you measure that out, could take us somewhere around 64. So there might be, well, we're not even 63 yet. So there could be, this could extend quite easily before we get some sort of corrective action like we're expecting. Or it's just doing it a bit earlier. You can see this market got overcooked. That matches up to about there, the highs there. Had a bit of a pullback, and then it sort of got a bit more extended. So it may be that it's not going to extend up to 64. It may be running into a bit of trouble up here. Just getting a bit heavy up here. If you're loaded up long, you might be thinking twice. You might be tightening up. Anyone that's not in the markets may not be ready to get in just yet because they're looking at it as being a bit overextended. And you've also got the backdrop of tariffs still. Who knows what Trump, the Twitter master, is going to do. So we'll just have to wait and see. but it's also not a reason to hightail it out of the market to close out your positions and jump out. You got to let them go, let them prove you wrong. Anyway, so that's the XJO. We've got the S&P. Nice little bounce there. That's the overall market. So that's actually looking really nice. And if you draw that, just draw a couple of lines on that to make it look prettier. I'm sure we're on the weekly. We're on the daily chart there. It sort of matches off that's the higher low. Just straight across there, we've had that little pop up. So that's just broken up out of that contraction, pretty much confirming that the high low for me is not technically confirmed until you break out of that high, but you can say that it's either one or two things. It's going to pop up, build a lower high, and then you're heading south, or it's just going to keep pushing up through 28 and sort of continue that trend up that you can see potentially up to 28, 30, 40. That sort of tops, that highs up there. So if that's the case, got a fair bit to go, and it's going to be interesting to see if we can push up through 28, and that's the previous highs. Let's just take that one off. Does that make sense here, guys? Just what I'm saying? So we've got a higher low in place. It's built quite nicely on the S&P. The broader market over in the US is looking quite good. I mean, the next few days will probably confirm whether we're going to start running out of steam and build a lower high, or this market's going to be positive, just punch up through 28. Potentially, if it's through 28, potentially it's got to move to test or retest the major highs at 28.80, and then we'll just have to keep a close eye on it just to see what's going to happen from there. Because don't forget, if that's a major double top and you're looking from a weekly perspective, I'm not saying that's going to happen, but if we're going to punch up through 28 and grind up and then react off 28.80, those highs, that's a major double top. That would lead you technically to go down and at least test down towards 25.50 and the lows. So sooner or later, there's probably a bit of a correction. GA, how are you, mate? We're just looking at the indices at the moment, if that's what you mentioned, or if I've got a bit late to your comment there. So yeah, it'd be interesting to see how we go on the S&P. So I would always just go through and see what the macro view around the market is. What's happening in Europe, what's happening with bonds, what's happening with the indices, what's happening in shares, what could drive them lower, what could drive them higher. You basically have to give yourself a bit of a picture. I don't care if you're trading one share in Australia, you really still got to just go through and just get an idea of the macro view. It helps you. It's always going to help you trading on, even if you're trading shares. It helps everything. Obviously, you're trading currencies. You want to know what the macro view is. You're trading indices. You want to know what the macro view is. What's going to be the moves of those markets, even if you trade Australian shares. Because when the proverbial hits the fan, it doesn't matter what you've got. It can come down, and it can come down hard and fast. So if we start to get with the S&P start to push up and we react off those highs, or we pop up, clean out 28, wash it out, and then start breaking back down and take out some of that 27 level, the higher lows, then we've got to be concerned it's going to be a deeper correction. A deeper correction is going to lead to quite a big sell-off, and it's not going to be anything new to traders if you're looking at it technically. So it could be hard and fast, could be quite savage, and then you get that sort of spike lower, like we saw here, a couple of days or a couple of weeks, bang, straight down. A couple of weeks from here could even just lead to boom, straight down. But only time will tell. That's probably a bit of a doomsday view, but just be wary. The Dow's probably not looking quite as pretty, but again, it's technically, yeah, not quite as pretty. It hasn't broke. The key support zones are right through here, and obviously with tariffs, that's copped it probably a bit hard in the broader market because you got the top 30 stocks which are on the Dow. Probably got more. We've got exposure to tariffs, so that it's not a complete picture. But we'll see what happens in the next few days, and see if that one can push up to that 25,000. And that's probably really what we need to look at. Still looks that's not too bad. That's not too negative, even though we're heading south on the FTSE. It's that contractive type of action, which I don't mind seeing. It means that we're probably somewhere close to building a higher low and potentially pushing up through 77, and then you'd expect that to tack up towards the highs, even into new highs. Yeah, which is through that 7,900. The DAX, where are we in the DAX? Probably not much on the daily chart, but the weekly, it's just that same old key zone around 12,000. See if they can pop up. XGA done that. Nikkei, okay, that's a lower high, but whether it's just contracting and we had a big pullback, we corrected that somewhat. We built a lower high. It's going to bring in a few more sellers, but then we get more of contraction action. Contraction action, that sounds good. Where these high lows are holding, then you've got a major lower high. The market's squeezing to a point of agreement, and then it's going to break either up or down. That's, again, if that's a weekly chart, that's got quite a few more candles to come into play or to play out before we see that. Hang Seng, I'd suggest that that's pretty much equal to that move down from the highs, consolidation sideways, secondary move down. So we'll keep an eye on that in the coming weeks just to see if they can bounce off roughly, give or take, where it is around now, 28,000. So you can find some belt. They've been beaten around because of the tariffs a bit. All right, let's jump into it. So chuck your shares in. That's probably enough of the overall market. Just chuck anything you want to take a look at. Put it into the chat. I thought I'd just quickly, while I'm waiting for that, I quickly just have a bit of a look at gold, copper. Copper's a big one. Copper's a bit of a barometer at the moment for the tariffs and the problems going around at the moment. And that has been heading south. And that's copper there. That's on your daily chart. Let's get rid of that. And you see, it doesn't look too bad. If you're looking, I should go to a weekly. WHA will do, mate. You can see we've had, whoops, get rid of that. The market's popped up. And this is on a weekly, don't forget. We've had a good correction and another good push up. When was that? 2008. That was, again, after around that GFC time. That was obviously a big sell-off. Regained ground all the way back up, made new highs. And we've had this big corrective action now. That leg down has been broken a while ago. So we'll go back to the daily. So that's not such a negative move. It's just that, and that's that big leg down. We've broken that recently with this push up. We've had a push up off that, was it one, say two, that sort of two, wasn't it, $2 mark. Had a push up off there, right up to that sort of resistance zone. Did correct, built another major high low, had a push up, but we've just broken this leg up, which is more of that reaction, just breaking out of that weekly correction lower, if you're all following. We've just broken down off there. So whether from here, I'll draw it up on the other one. Oh no, that's not really greatest, is it? Whether we just get continued weakness, it's broken through. Oh, that's not what I want, really. Let me just get a new chart. All right. Sorry, guys. Skype call. Now we've got double top up here, so we'll see if that's all right. See if we do get a bit of a reaction up here, and then that secondary move down, because that was obviously tariffs is what putting pressure really on the on copper. It's China being the biggest importer, I think, of copper, if I'm not wrong. Sorry, just 1 second there, guys. I'll just quickly write to somebody here who's trying to call me. Just one tick. Just one tick. There we go. Get rid of that. So with demand, everyone's obviously seeing copper. No demand from China. Price will drop. You got supplies will be increasing. Then obviously really capping any sort of advancement on copper. Now, until tariffs play out, I still think there's going to be a bit of weakness, and that would play into this, just really a major correction of this big leg up, what we've seen here. Whether we get those two moves down, we might just start bouncing off here, who knows, or whether we just keep heading south and then start to find a bit of a base in there. But copper's definitely under pressure at the moment. It doesn't look like it's even finding some buying support just yet. If we drop down to look at the 4-hourly chart, again, nothing significant there to say it's breaking that trend. I mean, it's miles away from breaking that trend. It could just it can correct up and then roll over and still hold that 4-hourly trend down. 30 minutes really hasn't broken either. So nothing's looking too flash. There's not a chart that's looking too flash on copper. So that would suggest that there's still a bit of pressure in copper to come, maybe pressure in the market from tariffs. If this is a bit of a barometer of what's going on, of course, that could turn on a dime if they come to some sort of a deal, some sort of arrangement between the US and China. If they negotiate and then tariffs don't play out, a trade war doesn't explode, doesn't escalate, then you'll see that probably could be an opportunity in it. But I would keep an eye on copper just for now. Gold, I thought I'd just touch on gold. Where are we? Gold, there we go. All right. So we sent out, I think we spoke about this the other day. Markets, this is on a daily. Okay, I had that big move up, and that was way up to 1920 or so. That's pulled all the way back over a good couple of years, and we've been moving up, slowly holding higher lows. And just recently, we've come down and retested this support zone, which sort of coincided with that support at 1238, and we bounced off that like expected, but it's still up for grabs whether we just build another lower high, like what we built pretty much at 1308. Might take a bit of time. This is going to take a bit of time, obviously, to play out in a daily chart. Whether we pop up, build another lower high, and either retest that. So there's three things I would expect. I would expect another lower high to play out, but it's obviously you got to view it whether we're just going to break, pull back, retest, build a higher low, and that would be more bullish for gold over the longer term. Just trying to find an example. It doesn't really play out that way, does it? Gold's just bang higher here, same off here. But if we get a higher low play out, that would be nice, and that could take us back up to retest 1305, even straight back up to 1360 over the longer term. Either that, or we break straight through it. If we start breaking through it and find some weakness, then yeah, we could have a few issues, and we could be heading down to 1122. Wouldn't expect it as such because I'm expecting a bit more pressure maybe on equities in the near or short term. That way you would expect gold to bounce, be a bit of a safe haven investment. The thing is too, you probably find the US dollar is going to be a bit of a safe haven if there is a bit of some serious selling pressure into equities in the US anyway. So it could have a bit of a neutralizing effect on gold, but either way, I mean, if the US dollar heads down and people want to buy gold, you're going to get that accelerated move up on gold. But if the US dollar is also moving up, gold could still go with it, just not as hard. Could be a bit more contained, I guess. So we'll see if that plays out, whether we get sort of a bit of a, following this support zone, which I expect is going to happen. I just think we're going to get a bit of a lower high, maybe either retest, build that higher low, or we could just grind here, grind back up. Who knows where we're going to start building that lower high? That's sort of the next phase. Whether you just follow it up off the, whoops, don't know what I did here. Follow it up off the shorter term charts. Go to an hourly, see what that's saying. I mean, on the hourly, that looks very positive, to be honest. So on an hourly chart, you could potentially be looking for a buy through here, and then you've got your stop. Feel free to put it down here, and that would mean that leg up from high to low, if you extend that out, you could easily be looking up towards that 1272 on gold. You can even tighten your risk up. If we break up through here, I would expect that looks very nice and bullish. This is on the 1 hour chart, and that would take us in line with pretty much not a key level at all, but it's going to have some sort of reaction off that zone around 1275. So that actually looks very good. Don't be surprised if you see an alert come out soon. For anyone that follows TradeSetup, I'm going to keep an eye on that now. All right, so that's all I wanted to touch on. Just copper and gold, really. Let's get into the shares. Let's get over here. So first off the rank is Bub. Yeah, I don't like this now. I've gone off it. I've changed my mind. It's not looking too I don't see anything really too positive just at the moment. The thing is, it hasn't broken down the higher lows, but these higher lows looks like it's getting heavier as time goes past. Go to the daily, it's getting a bit heavier, I would suspect. You can see this move up here, had a pullback, built a high low, had a retest, didn't get to the highs at $1.10, failed. And when it fails quite hard. You can see it's boom, straight down, and here again. And it comes, right down. This move down has been so close to that sort of anchor zone, or even 70 cents, 65 to 70 cents. It was quite a deep correction. You don't really want to see a deep correction when the market's positive or bullish. Now, that could have been okay if we held from here and popped up here and then had a nice little shallow. I'd like to have seen this work done over this amount of time, but at higher levels. Instead, we've come all the way back down to sort of, again, that 70 to 75 mark, and that support zone there. So that's not looking as positive, even though it hasn't broken these higher lows. It's not looking positive to me. Whereas, just going back to that weekly, it is extending to the downside. So it could easily hold up here and pop up. But what are we going to run into? Just another lower high? Or is it going to be a time where it's going to start popping up? It just doesn't look that great, to be honest. I'd rather just give this time. We were looking at it, I think it was back here, somewhere around April. I thought if this market holds up here and pops through this high, I think we had a buy alert through the high at 85, 86, say. Never got there. Instead, we turned around and reversed, and the alert was cancelled with the move through those lows at 76 or so. So that alert cancelled, but then it just started to get that heavy look or heavy feel to it, where buyers weren't really, and you can see buyers are not too happy of holding when it does. You get these little spike ups. Whether it's on the back of news, it spikes up. Buyers not keen to hold it, which you got to question, why aren't they keen to hold it? They'd rather get out and book the gain. So any sort of spike is leading to some really pretty quick profit taking. Even back here had a good move up here. That one candle took out the previous 3 days pretty much. Within 2 candles had taken out 4 days. And this one here, you got a couple of days up. Well, that was probably a bit better, but it was a deeper correction, which I don't like to see too much. And then it was choppy through here. It spent the next 3 or 4 months really choppy. Took out the lows again, obviously news driven, boom, straight back up. Couldn't get up to the highs. It rejected those highs up towards that $1.10 pretty quickly. And then the next few months doing nothing, going sideways, started to lift here, and that was pretty much knocked on the head pretty quick as well. So in all honesty, I'll probably just stand aside on this one. And like I said, we had an alert on that. And because that price action, this price action to me is starting to look heavy, and you can just draw a line. If you can see some sort of consistent support zone, then yeah, okay, it's looking good. But if you just go, you can't really draw a line up there. Okay, at this stage it was broken. You go, okay, I'll take it from that low. Oh, at this stage it was broken. There's nothing really for me that's saying buy it. It keeps breaking. So whether it's just consolidating sideways, I don't know. So there's something they have on the cards. And if it's consolidating sideways, you'd think you'd have a clearer. Maybe it's that 70 zone which is going to provide support, and then it's just really spending a lot of time contracting. So that would mean that would lead to believe that it's going to take a long time to play out. So I'm more than happy to have this on as long as it holds those high lows, have it on the watch list, keep watching it, don't trade it. Well, that's what I would do. I'm not saying to no one don't trade it, and just keep it on the watch list and see if we can start to lift. Because at the moment, even you can't really find any sort of support zone anywhere that is showing that the trend is up. It's really just going, it's had this little run up. Now we're really into that consolidation phase, going sideways. Maybe it has to be some more news come out that's going to drive it higher, but I think that's going to go quite hard and fast, like we have seen these last few accelerations of those moves higher. So I would really like to see, rather than that chop just going boom up like that, I'd rather see it sort of build here and then accelerate up a bit. I'd rather give myself somewhere where I can see that you've got a leg up. Okay, you might not catch the first leg up because it could be news driven, it just pops up. Then see a bit of profit taken, but holding highs. I don't want to see this pop up and then a deep correction right back to where we started. I'd rather see this type of action where it pops up and then it consolidates. Spend a month just doing that, and then you look for that breakout. You know exactly where you're going to put your risk. you're just measuring that top out. It could lead you right up until, you know, whatever happens, could lead us up to 120. You've got your risk rewards looking good, could be 2-1. You're not taking too much risk on the trade. And then see if that's going to be the leg up that's going to break through the highs at 110 and just go on with it. But we'll see. We'll see. So that was Bubby. What's the next one? WHA. Let me just get, again, this one on the daily, I think you're going to have to sit back and wait on this one. It's quite clear you got a major double top up here. You got your lower high in place. Actually, this is textbook. It looking like it's quite textbook. Not failure, but if you had this, I think we had, I can't remember if we had this or not, to be honest. I'm sure we did. I haven't got it open, so it doesn't really matter. All right. So if you draw this up, you've got resistance zone through here. This is a washout. You know, you've got your little washout here. That was off. The trend was up at that stage. Then what have you done after that? You pretty much come back down. Okay, that's fair enough. It could just build from here. This leg could have let it to go up. As soon as you get a couple of days reaction lower and you're long, you could have just bailed, not waiting for, you know, a key lower high, because you've got this double top in place. You've got a washout. A washout of the highs is not too good. I mean, it doesn't mean anything until you get some further confirmation that that's definitely going to put some pressure on the market. So anyone that may have bought it on a break into new highs, where they're going to put the stops, probably going to be, it may be way down here. They haven't got cleaned out yet, but then when they get this sort of move, it can only retest that same zone at around 270 and starts backing off from there. You're going to have to think twice, or they're potentially going to get stopped out here. I'd rather front run and get out there. And you can see that was quite clear. And this is what I like to, this is a bit of a heads up. If you're putting your support zone just like that, say at this stage, when it washed out, it went up here. You've got your support zone along here. I mean, that's quite clear. And then it breaks. You got this break. Actually, let's just clean that up a bit. So support zone through here, and you can see this break here. You've got to take note of that, because that is your first sort of crack that something's not right, that this market could be seeing some weakness. And that's the first sign. If I looked at that, if it pulled up short here, if the market sort of fell short here and started to build again, that's great. I mean, that's fine. That's just your continuation. Didn't get through the highs that much. It had to pull back, bring in some more buyers, hold some higher lows, and then just drag its way back up. And you can see that it just potentially that could have accelerated through the highs. Sorry, I just got a call just then, so I had to cancel that. So if that was the case and that started playing out, and you're watching it at that stage, and we didn't get this push through the support zone, then great. That would have looked more positive. You're happy to hold your stop. You know, you bought it on a breakout there, you're holding your stop here, and then you're just really waiting for an opportunity to see if you can tighten your stop up. Instead, we come all the way down, broke through this rising support. You've got to be thinking twice about that and going, well, hang on a sec. Is that going to be a washout? Is this zone going to be a washout? And it's just going to clean me up. And then I'll be looking for a higher low. I mean, it could just keep going straight down from there. Then you're going to get tagged on your stop. But if you haven't got tagged on your stop, it started to grind back up, and you retest that low, I would be bailing pretty quickly, because to me that's showing weakness. And I would expect, I'm trying to front run when you get these couple of red candles, even down here, as it say 240, I would be front running, getting stopped out way back down here. I wouldn't bother. I would rather be out and be wrong. You know, if it does start picking up again, so be it. You can always buy back in when it breaks through back up through the highs. That's fine. I'd rather be out, because generally when you get this type of price action, and then it start to fail after this sort of washout and double top, all that sort of price action, it's showing weakness. It's not showing any strength at all. It's showing that some sellers were willing to push it straight down here, just bailing, running for the hills. And you got this push down here. It did get rejected. And just on a side note, I just want to point out, you can see that candle, and this is what a lot of people I think do look at. They look at the close. I'm more inclined to look at the actual lows and highs, so it doesn't really have to be. So that's just one big wick you can see. Some people would say, okay, well, it didn't close down there. It actually rejected and it's looking positive. I'd be on the flip side of that, because it's still going to trade down there. It's still triggered some stops. It's still done some damage to somebody. Yeah, it'd be hard to argue with somebody if they got some hard and fast stops in there. They've been triggered out, and you're saying it's positive, and they're sitting there going, "Oh, hang on a sec. I don't think that's positive at all. I got stopped out. I still got stopped out." It doesn't matter to me. I'm always taking the lows, whether it's a wick off a wick or whether it's an actual close down on those lows. That's why I'm always looking at that sort of price action. Even though it's rejected and it's closed back above this support zone, it doesn't mean anything to me. It's still showing weakness to me. It's still happened to trade down there. It's still showing that sellers are willing to push it down below $2. So I hope that's making sense, guys. G'day, Lauren. Yeah, me too, mate. Got to lock the kids up for this hour. Um, anyway, so does that make sense? What we're talking about getting out here as opposed to waiting till you get stopped out. I'm not saying what you did in hindsight. You actually got stopped out, maybe give or take, depending on where you had your stop. I think it's gapped. So no, you would have got creamed on that because that's the open. Don't forget, if you had a hard stop just below here, you've got stopped out all the way down at 140 on that gap down. Um, is this making sense? So just let me know if it's not. I'll see if I can explain a bit more. But I hope that's making sense. This. I'm just trying to point out this price action and just getting it in your head and what's happening there, what's happening with buyers and sellers, what are they saying to you? And here at this stage, they're saying, oh, no one, there's only a few people willing to buy it through that high, not too many people, and then sellers, boom, straight back down again. That's not a very good sign of strength. The fact that we pushed down here, sellers have kept it going on that day and pushed it all the way below $2. That's not a good sign either. Then you've got to gradually push higher. And then that was actually not looking too bad until we reacted back off that resistance zone. Couple of red days, coupled with what's happened in the past, I'm expecting that, and a lower high, I'm just expecting that to be further weakness, and we're going to get that a further strong drive down. So I'll just be bailing, not mucking around, bailing, getting out of it, reassessing it. As it played out, you've done the best thing because, like I said, it gapped on this candle, a gap down here, probably tested, rallied all the way back to $1.90, and then closed down at, say, somewhere around $1.60. So you've got pretty much poleaxed on a hard stop on that. And if you took off your hard stop, it's ballsy in my respect. So that's just price action to get to take note of what's happening, especially at this stage. If you're um, in here, trying to decide what's going on, that trend up is definitely breaking. You've got a lower high. It's pretty much it's all but confirmed at that stage. So it's really something to take into account. Uh, yeah. Oh, look, I sort of divergence. Yeah, you've got. It's probably another thing. It's heavy selling from overbought to oversold, back to overbought again, and that's what Brent was talking about. Sort of that, I think that divergence, which matches up with those highs. I'd rather see divergence, which it doesn't get down to oversold. Just trying to find something else. There's not too many. Something like this. That's sort of what I call divergence when it doesn't get down too much. Sellers comes back up, has another swing up. It's a weaker swing, and then either corrective action or just complete capitulation. So I hope that's making sense on Waddle. Who called that one? Gino? Yeah, but we'll take a step back. I wouldn't be buying that just yet. I don't think it's anywhere near any sort of support zone. It's got a major double top. Just trying to think if, and that's your deeper correction. Maybe probably the one thing I don't mind in it as such. Let's just do a new screenshot. It could take me forever. So if you're looking to buy it now, okay, you've got major resistance up here. It's broken the anchor here. We're sort of popped up. This pop up here, it's taken a bit of energy just to get it from the low of say 85 up to about $1.35. I'm just trying to find somewhere where, and this is probably the only real region, and it's probably bouncing a bit premature, bouncing off that support, which is not, it's not a major level either, because at this stage, anyone that's been buying it in here, anyone that probably bought it in here, they've all been cleaned up. So it's had a deeper correction. That's probably the one thing working in its favor. Had this pop up here. That's a massive M pattern. You've had this deeper correction. Once it can't get through the highs and it starts to fail, you're going to get that deeper correction. So it's probably in the zone where it could just start to see. But again, you want to see some higher lows. You want to see a bit of contraction, especially after a good solid leg down. So you want to see buyers start to step in at higher levels, slightly higher levels, and see if you can get the opportunity to work off a higher low and then just see, from there it's just really managing risk, but that hasn't played out for me at all just yet. And I'm talking about this low way down at 90. So I want to see this type of price action play out to show me some signs that, okay, buyers are starting to step off that 80 zone, starting to buy it up off 80 cents. They think it's good value at that level. But I don't want to be the first one. I don't want to be the guys that buy it in here or buy it in here because they could be wrong. Could turn around and bang straight down again. I want to buy it when it's broken out from a lower high. All right. I hope that makes sense there. Now, what do we got next? Gem. See, Gem is starting to curl back up. You can see this. That's a weekly. Not similar price action, but it's copped a bit of a beating. It's probably easier to see on the monthly. Had a good run up here, pull back, tried to go back up again, only got so far as 475. So it had a couple of moves up, and it's just completely failed. Took out this low, and I'd suspect if you measure it from highs around say 550 down to about 250. What's that take it? 225. Say $2. So these two legs down are roughly even. So maybe it's, and you can see on the monthly too, it's extended to the downside. So just taking a look at that, it could be in a zone where buyers are happy to start stepping in, could see value at it. On the weekly too, you can. Well, it's not showing anything on the weekly either. It's had a good leg down here. That's quite a strong move down. It gapped down, didn't look back, and went straight from basically gap down to 380, and it's head all the way back down to 210. This low. We've reacted off that zone, and that may be purely because of that. This move down as roughly equal, around that $2 area. Maybe that's just the only reason, one and only reason why it's reacted up, unless there's some news come out. Again, it's pulled back, and we're just looking like it could be building for a higher low on the weekly charts. Nothing's confirmed yet. The anchor for this move down is probably wouldn't say that's an anchor anyway. There's no real serious anchor on the weekly, as opposed to something like this. You've got an anchor here, you've got an anchor here, maybe an anchor down here of this trend down, and then we start to break them, start to work back up. There's nothing really. It's just pure capitulation, this move through here. And there's nothing really, I wouldn't really say that's an anchor either, around that 350. That's just all your short-term moves. So if you flick it down to the daily to see where we're at, this would be your first sort of level. We could get, the only reason I'll be looking for a long off this, potentially, is, I'm not saying I would, I don't like it as much, but it has potential. You got $2 zone potentially. It's going to hold up. Buyers are maybe stepping up in off that level. If it can break up through there, I think we might get this extension, maybe up to $3. But you got to look for your entry and see if your risk reward is going to be 2-to-1 maybe. Is it worth taking off here? Could be that this is the start of a new leg up and you start attacking all the way up to 460. Great if that's the case, but the weekly is showing quite a bit of weakness. You're probably going to get some sort of reactive move up, and then we could easily, if this does play out, we've got this sort of move up, and then we start doing this, then you'd be questioning, okay, maybe we're starting to look to head down, at least back down to 210, retest, wash out $2 and pop back up again, or just continue its way down. You don't know what's happening. So that's why you're going to be wary if this is just your secondary move up and we're just sort of popping back up. Your bargain hunters are jumping in, trying to push it higher, and they could be thinking it's going to 460, and we get this market, it runs out of steam somewhere around $3 because that's a sort of an equal move up, and then we get lower highs come in place, and then sellers start to jump back in. Anyone that sort of bought it through here is maybe holding that one, and then it starts popping up. They just want out. They want out, book the loss, call it a day on that stock. So it'd be interesting to see how it goes. Could be completely wrong. Could just head straight up, and it starts grinding its way back up. But I think maybe fundamentally something's got to change there. Don't know what the story is. What actually what's caused this sell-off? But I would suggest if this is going to push all the way to 460 or so, something is going to be news driven. It's going to be build. It could just get stuck between here. So either way, I'd just be keeping an eye on this one for now. Galaxy. Let's have a look at Galaxy. This one could just be going sideways. The weekly The weekly doesn't look too bad. I do like the weekly. I guess it's quite clear on the weekly on this one. You've got support zone through here. The market's pushed up, reacted. It's took out those highs. Didn't get too far. Had to come all the way back down, retest those lows, and had that accelerated move all the way back up to 460. And what we've done here, it's looking like, to me, buyers are stepping in somewhere around 280, 290. Not confirmed just yet off this weekly anyway, so you could probably go down to the daily just to see what's happening. It looks like it could just be range trading between, say, 290 and 360 for now. But what I would like to see, say on the weekly, is a push up to maybe 360 push up, then a shallow retracement, holding some inside, some high lows, maybe around 340, 320, 330, 330, 340, say, up towards the top end of that range, and that would show, sign of strength to me. Otherwise, it could just pop up, pull all the way back down, and just sort of range trade for a while until something comes out, some good news comes out. But either way, I think this is a good little base. If you bought it off this base around 3, on the lower time frame, you've probably got this weekly chart working in your favor, or the longer term buyers working in your favor. Looking at the daily, yeah, it's quite clear. It's just choppy between those two ranges at the moment. I wouldn't buy it just in here, because who's to say that this is not going to lead to a lower high? You get buyers who bought it way back here, been holding on to it. Anyone that's been buying it sort of off these lows is getting a bit jack of it, getting a bit tired of holding it. We could build a lower high at 340 and it could head south straight through 3 and have that deeper correction on the daily anyway. And that could be like that 1, 2 moves down, come all the way back down to, say, 225. You're holding something that's losing on the books for a while, and then you really just have to put it in the bottom drawer again and see what happens. Hi, Christopher. On the screen, if you just chuck it down to on YouTube, click on little spinning wheel, go to quality, hit 720, and that should improve it. It's the old YouTube problem there. See how that goes, see if that fixes it. All right. So yeah, I'm liking the weekly, but I just don't think the daily has confirmed it for me. Like I said, if you let's just take that, click that. So price action, what I would like to see to be buying, obviously, I'm always looking to buy it on the rise. I'm not looking to just try to, I wouldn't buy it just off that, because there's a support zone there, because you don't know if the sellers are going to win out. Maybe you've got that as a little bit of a washout, pops up here, like we get. So that's where we are at the moment. Off the range, we may just pop up, build a lower high, and then boom, straight down. And that could be the start of a really serious sort of move down, like I said, down to 220. That down there, and if you're not going to use a stop, then you're going to sit on a loss for quite a while. So I would prefer, rather than just buying it off support, I would prefer it to push up to the highs potentially, and then maybe have a little, that two-legged that I always talk about, I like to see, work off a higher low. Then you've got an inside higher low, you know exactly where your risk is, and you've got this is going to be a major higher low up towards that 360, so the top end of the range, like I was just saying. I hope that makes sense there anyway. Alrighty. Oh, perfect. Sorry, guys. I should really mention that at the start. It's YouTube. I think the automatic or default settings down to 400 or so p. If you ever get that, just click it to 720. I can assure you it's coming clear on my screen. Have I missed something? There's Galaxy, SDA. We'll see if we can get through those, Laurent. Yeah, SDA what am I on the week, the daily? Look, that's heading high. I'll be, as long as it doesn't break through that low. It's actually looking all right. I would be looking just for a setup on SDA. A few things that I like. It's quite clear that that's heading up. The market's pressed back down, held support. You've got a high low here. It's pressed up. Only really took out the highs slightly. So this contraction here, I'd like to see if it can pull back here and then just build an inside. If you can build an inside high low within this leg down, if you can get what I'm talking about there, inside high lows here, then great. Potentially buy it off that inside high low. You've got small risk. See if it trades at least up to that 6 or takes on pushes through that $6 level. It doesn't seem to get on too hard. It may not take out, it could just take out that, is it 610, 605? Could take out those highs, may not go too far. 640, isn't it? 630, okay. Could take out that high at 630. Not go too far, but either way, you're not going to risk too much on that trade. Let's see how it goes. Either way, that daily is looking good. I think the weekly's on its way up. On the weekly, one thing to keep an eye on, just look at that. This is why it's always important to go from the weekly and the daily, just to see, again, what potential you'd add to it. You can say that's a low, that's your high, that's your contractive or your macro correction. So we're looking for this leg equal leg up. And it probably just about would be. It could be just about there now. What are we down? 150 up to, it's around, well, let's just see. Lows of 150 up to around 475. Mass is right. What is that, 225? All right, 250. Take that from the low at around 3 up to, am I missing something there? 150, 475, it's 350. All right, take it from 3 up to 650. So it hasn't, maybe on the weekly, it's getting to the end of that trend up. If it's equal to that trend up, so you got the first leg up, contraction, macro correction, built a high low. You got the secondary leg up, take it from the low to high. If you get it and you extrapolate that out to somewhere around 650, maybe not. It could run out of steam at 650, which means it's still got through that high. If that's the case, it's still potentially worse, but just keep that in mind. And that way, for me, if I was going to buy this one, I wouldn't want to add too much risk to it. I wouldn't want to allocate too much risk to it. Ideally, something like this where it just kicks on, you're not adding too much risk, just this, you can see pushed up, pull back, higher low, in inside higher low even, a couple of down days here, and then it took off 3 or 4 days up. Don't allocate too much risk to it, and if it gets and starts backing off in that 650 zone, maybe book a small gain and call it a day, see how it goes. Or if it just keeps going, so be it. RWC, we'll have to slowly, yeah, I mean, this look, it's obviously gapped up. Never like trading these when they've gapped up. I'm always expecting some sort of profit taken to drive it down to close that gap, or at least down to sort of that 480 zone. And you can see even on the weekly, this move up, it's got a bit ahead of itself with this gap up. So I'm sort of expecting more that, even though this doesn't look too bad, it's starting to look like it's going to grind higher. It may just spike up, find a inside resistance at 580 and have your secondary move down, which could potentially close that gap. Not saying it will. I'm just saying this, if you've got the trend up, and probably pretty clearly, if that's your overall longer term trend, you can see bang, 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 bang. You've got a bit ahead of yourself. It's either going to go sideways for a while before the trend catches up, or it's going to revert back to the trend, reversion to the mean type of trade. So maybe that's your first leg up. It's popped up, maybe lower high, and it comes 1, 2 down, and then start to build from there. So I have been looking at this one, Lauren. I just would be happy just to keep it on the sidelines. Again, just keep it on the radar. And if you're going to buy it, potentially, you're looking for a pop up through that high at 566. If it just pops up right from here, I'd be, small risk on that one. Maybe down at 540, not risking too much, and see if we can at least test those highs at $6. Then at least, you've got something on you. You can book some gains even. Now, was that all I had to do? Okay, ABS, let's have a look at that one. We'll finish it with ABS then. An AGL, okay. ABS, keep away from it. Is that right? ASB. Okay, Austral. That to me is looking like it's starting to hold some higher lows, but they're higher lows. It's not really getting through those highs that much, but it could be the start of an accelerated move up where you get something like this, a nice strong leg. You can see that volatility is starting to come out of the market. The pullbacks are not that high. It's not getting too far, but sooner or later the buyers you would expect to start to take control and push it up through that $2 level. But either way, even on the weekly, that looks quite good. It hasn't done it yet, and it is getting a bit extended up here. So just bear that in mind. It doesn't mean that it can't move. But I think the days where it spiked up like this, spiked up here, may be over. Not over, but I think it's getting a bit more conservative. It may be on the weekly. It could have a little pullback, build a high low. Again, maybe down here, build a high low, take a bit of heat out, not much, and then resume that move up. But yeah, I even wouldn't be confident if it just pushes up from here, buying it through that high, because then you've got all these highs to contend with up around 190, and you're sort of preempting, you're trying to hope, and if it doesn't break up through 190, so be it. But either way, I think the weekly doesn't look too bad. The daily's a bit overbought up here. The weekly's probably getting that same stage. So how much, are the buyers got enough steam at this with this run up to push it up through 190 and potentially up through $2? Just bear that in mind anyway. Again, it's another one. There's quite a few that are not looking that they look good, but from the way I look at it, especially when you add in stochastics and maybe volume's not that great here on this one. 40,000, not great at all. When you add in those sort of factors, it's potentially one just to keep on the radar rather than buying it. All right, what do we got? Murray, last one. AGL. Paul, have you still got this one? I think it was AGL Paul might have had. For me, that's just massive contraction on the weekly. And it's potentially broken up. So two things. Let's just draw that up. All right, you've got this trend up, pull back, good acceleration up. All right, then you've got 1, 2 moves down. Okay, that all comes into play with this trend. It's just reversion to the mean style of trading. That got a bit ahead of itself. That run up to $28 or $28.50. Couple of moves down, and now we're starting to lift off. You got this higher low. You can see pop down. Maybe don't forget on the weekly chart even we could have more corrective action. This could accelerate up, and then you have that massive pullback. It could be that it's just coming to a longer term point of agreement on the weekly chart, between the buyers and sellers. Buyers are still holding higher lows. Sellers could potentially hold lower highs. We could just get this move up, which that's okay. You can still make some profit if you're long on this breakout through 22.50. But just be wary that it could run out of steam somewhere around 24.50. You booked a couple of bucks, doesn't matter. Still doing okay. Down to 23.02, yeah. So that's the weekly. I mean, it's still looking quite positive. It's just how long are we going to contract further? You can see there's quite a distance between the support and resistance. Are we going to contract further and it's just going to hold? I would ideally not like to see these sort of moves. I'll go into the daily. Because the daily and the weekly are both sort of overbought. It's overbought here on the daily. The weekly is edging up to that overbought situation. So maybe that's 1, 2 moves up. We could just roll over, retest the lows, or have a pullback, build a higher low. I would just rather see, if that was the move, I'd rather see a stronger push up, a pullback, and chop a few people out that have bought it on that little pop. Chop around but hold a higher level. This is more for me, it's just 1, 2, and we'll run out of steam here. From what happens from here, I wouldn't be buying it right now because I still think that could easily roll over from here, getting a bit ahead of itself, both on the daily and the weekly. And look at this move. It has, on the daily, I'm trying to explain it, we sort of broke that move down, but on the weekly, it's looking like it's just popping back up, and it could just build a major lower high on the weekly charts, like I was showing in here. It just looks like it's running out of steam up here, so this is a tough one, actually. I obviously wouldn't buy it up here. I want to see it pull back. I want to see maybe a couple of moves down. I'll draw it. Again, this leg has been going up for quite a while. Had a good move up here. 1, 2. This leg has moved up, took out that high, maybe getting a bit overcooked up here. from here I want to see that. I want to see that kind of move down rather than just straight down. I find them different. That's buyers averaging in, and that's just sellers getting the hell out, or buyers getting the hell out. That type of move straight down from here. So I'd rather see that and then see if it can build from here and hold a higher low at a deeper level, and then look for a buy entry. You get your little entry, you got your higher low. You've had a corrective action lower of this leg up. This leg I need to correct before I'm happy to get in. I want to see this corrective action, build it off a higher low, and then see if we can play our way up through that high, and then get to the top end of that weekly range at somewhere around 24.50. I think could still get a good couple of bucks up. 23 was it? Yeah, okay, so it's about there now, isn't it? 23. Perfect. Energy codes like the banks. Probably, yeah. That's gonna take a while to play it anyway. They've got their hands full at the moment, haven't they? All right, so yeah, that's what I'd ideally be looking for. I wouldn't just buy. I don't like when it's gone so far, from say 20.50 up to 23, a couple of bucks, $3, give or take, $2.50 without really moving back, and you can see it's getting overextended up here. How many more buyers left on the sidelines to keep this market moving higher if you're going to buy it up here? So ideally, I'll be looking for this type of price action and looking to buy in off a higher low, minimizing risk. You know that potentially it's had a good little corrective action of this leg up, and you get another move on the cards, and then just manage your risk from there. See what happens. All right, so that's probably it, guys. I'll probably call it a day there. A couple of days, yeah. No, it looks good. All right, guys, that'll be it for me. I'll have to call it a day. Thanks very much for joining me, and we'll be back in on, was it Thursday at 12:30 again? So feel free to join us then. Any questions you may have, feel free to send an email to support@tradesetup.com.au, and then I'll get back to you. Otherwise, have a good couple of days, and I'll speak to you on Thursday. Cheers, guys. Bye.